set in 1996. For more on this historic run and the overall strength of U.S. markets, we're joined now by Alan Nuckman. He's Chief Market Strategist at Bullseye Options, and he joins us from Chicago. Alan, it's been a while, so we're delighted to see you here. Thanks, as always, for making...
Good morning to you, Paul.
...making time for us. I speak to a lot of people who believe that solid corporate earnings, and we seem to be seeing it again this quarter, are supporting or are legitimate support to this stock market. Do you agree?
Absolutely. Up, and away. This market melt-up is based upon earnings growth, and that's what we've seen the two quarters coming into this quarter. We had 10% earnings growth. Now, this quarter, we've got low expectations, but we're beating about 70% of the time on earnings and about 75% of the time on sales. And this week is big because about 180 of the S&P 500 stocks report. So it's hold on your hats and let's see what the numbers say.
Hey, Alan, it's Paul here as well, Paul too. Two questions I have. Number one, are the expectations for earnings sort of more downbeat and sort of under-promising, and then they come out over-deliver, and that helps drive? And then the second question I have for you is, are we just not seeing a lot of multiple expansion where the analysts are saying, you know, it hit my target at $105, I've got to raise it up and just increase the multiple from, say, 19 times to 20 times. Boom, now I put a $110 stock price on it.
Well, I think it's a combination of things. And again, as I live my life, you know, have low expectations and overachieve, and you're going to get positive results, and everybody's going to enjoy the ride. You're seeing that in the markets each and every quarter. And also, if you get into the multiple game here, if you go out to 2018, they're looking for about 18% earnings growth. And that would mean keeping the multiple where we've been at 23 right now in forward earnings. We've been at that level since 2014, but you've seen earnings growth, and that drives the market up. Now, to do the simple math on that, that projects S&P 3100, so that's 20% higher. So as long as we continue on this same path with this type of earnings growth, obviously that justifies these stock prices. You've got to understand and remember that the corporations are having the most profitability in their history, and $290 billion was made last quarter, and it's going to be eclipsed this quarter, so that's what truly drives the markets.
What are you hearing in corporate commentary and guidance, Alan? We spoke to, or we had an interview on this program earlier in the show where our U.S. market expert at Citi thought that companies were much more optimistic about the prospects for reduced regulation and reduced taxes as well. Is that part of the narrative here?
Yeah, I think so, but I mean, we've seen a positive market move. We've had 103 straight months since the low, and the market's moved up a couple 100%. So this rally has been, you know, a long time in place. Yes, you know, people may feel a little bit better, but it's not about how we feel. It's about how the prices act and react. And obviously, we're in a very strong melt up here. There's no choice, we've talked about this before, between equities and treasuries with interest rates this low. And yes, we're going to raise rates in December 0.25%, but there's not a 50-50 chance we're going to raise rates again here in the States based on the numbers, what the markets are telling us anyways, until June. So that's not even part of the equation. And, you know, equity markets are still outperforming. Look at the Dow. You know, again, we don't talk about the Dow much because it's not a really good measure, but it's dominated, and we're getting close to up to 20%, another 300 points, and we're going to be up 20% year-to-date in the Dow. Mathematically, a lot of that's because these big dollar stocks are disproportionate, and you're seeing something like, you know, a Boeing or a Caterpillar or a JP Morgan. Every dollar in a Dow stock translates to about 7 points. So something like a Boeing has really driven that market because it's a very expensive stock.
And Alan, maybe can you comment perhaps on NASDAQ and in particular maybe some of these FANG stocks, which seem to have either topped out or peaked out, or actually even come off a little bit.
Be careful.
Yeah, I will. But they were certainly driving the market higher if we go back maybe even 6 months ago. I mean, they were all over the press and top line. So, you know, one of the old trading theories was when the leaders start falling, the rest of the market may follow suit. Do you want to comment on that?
Well, we've got some earnings coming out in those, you know, in those tech stocks here next week, so we'll have to wait and see. But Facebook just made new highs. You know, I wouldn't doubt those high flyer momentum stocks. But you can use them as a bit of an indicator. But every time that they've backed off, they've rallied the distance of that sell-off on top of those old highs. So until that stops happening, you've got to respect the overall move. And the Tech 100 is still up 25% to lead the way, taking a little break. Now, the break is really because Apple hasn't been participating lately. So if Apple can get its sea legs and get going again, that's going to drive the whole market because it's a big component not only in the FANG group, but also in the S&P and in the Dow.
Alan Nuckman, thank you, as always, for joining us from Chicago. He's Chief Market...
Have a great day, Pauls.
Chief Market Strategist at Bullseye Option, and he joined us, of course, from the Windy City.